Michael, I got a bone to pick with some people.
Yes. Tell them.
I don't know if you're aware, but recently there's a lot of influencers online that are accountants as well.
Now, are they actually accountants or they think they're accountants?
They think they're accountants.
Lovely, my favorite.
Now, I love it because some of the content is genuinely great. And for those that are putting out great content, props to you. You've done your research, you're doing the right thing, and you're giving everyone really sound advice. But there are some,
Percentage-wise, how many are giving good compared to bad?
from what I've seen,
Yeah.
I'd say probably 80% bad, 20% good.
Nice. So note to everyone, careful to all the videos you see out there. A lot of it's garbage.
Take it with a grain of salt. You know,
But double check everything yourself or check with your accountant. Because some of it may be good.
at the end of the day, a lot of these buyers agents, they want to sell you something, right?
Of course. They want you to buy property.
They want you to buy property.
And come to them
So
to buy
they're
the
going to do
property.
anything in their power for you to get the loan, anything in their power for you to buy that property, even if it's a shitty investment. So that's the bone I've got to pick.
You gotta. It's a general life. It's a general life lesson. People online are trying to sell you something. Even if they're trying to come across as giving you good advice, you always have to look out for the agenda. There's always an agenda.
100%.
So look out for.
But don't
Take the advice, listen to it, but don't jump straight onto what they're saying. And
It's not gospel.
it's not gospel.
Yeah.
That's right. You have to understand that there's an agenda behind what they're saying. Understand what are they trying to do? What are they trying to sell me?
Correct.
And keep that in the back of your mind when you're listening to people.
Are you
online.
providing solutions? Are they providing solutions? If so, great. Continue doing what you're doing. If you're not providing solutions, I hate you.
So if we're talking about, okay, what are some of the things that have been said where you have a problem with? Or what's some general advice, or not? Not that we can we're giving advice, but what's some general
I'm gonna
tax structures to talk about?
No, I'll put out a pet peeve of mine after that, right?
Yeah.
This is why I say this. It's because I've had clients that have come to us that have bought property in the wrong structure because they could get a loan in that structure, but they weren't told about the tax consequences or the tax effect of that.
Yeah.
And that's all well and good. I understand. You need to, when you're about to make a purchase of a property, always speak to your accountant, and your accountant is going to, if he's a good accountant, once again, he's going to talk to you about three things. Is it positive or negatively geared? Is there land tax implications? And are you holding it long term?
Yeah.
Right? Those three are the most important when it comes to buying a property. I'll tell you why. We'll start with the first, which is it positive or negatively geared? If a property is negatively geared and we have it in a trust structure, those losses have no tax effect on your personal name.
They have to be carried forward.
They get carried forward, and eventually when you start to get positively geared, you may get some tax benefit from
You
it.
can use those losses and offset future profit.
Correct.
Yeah.
If I'm buying a property that's negatively geared about 20K a year for whatever reason, if it's a long-term hold, I intend to live in it, anything like that.
There's tax benefit to having a person.
There's tax benefits to having a person.
Or in a company structure.
On that note, why would you
depends.
buy your main residence in a trust?
You would not buy your main residence in a trust.
Why, Michael?
Oh, why would I buy my main
No,
residence?
why wouldn't you?
Why
Tell me.
wouldn't I?
Yeah.
Number one, you lose your main residence exemption.
Thank you. What's the second consideration?
Second consideration is land tax.
Boom. I just
Land
mentioned it
tax
before.
on every single dollar. So let's talk about land tax for a quick second. Land tax is another one of our lovely state taxes, along with a stamp duty that you have to pay and payroll tax and all the other great ideas that they come up with. Land tax. So you have to pay land tax. Now, in New South Wales, if the property is within New South Wales and it's in your personal name, you have a cap of $1.2 million. So if you have land worth $1.2 million, even investments, because your main residence is exempt from land tax, actually. So let's say you have a main residence that's exempt from land tax.
I
And
just need to clarify, 1075, 1.2 is for payroll. Sorry.
Oh, sorry.
Sorry, bro.
Oh, yeah, payroll, single payroll.
Yeah, that's all right, but continue.
So 1075 is the land tax threshold.
Yep.
So in New South Wales, if you have even your main residence is exempt from land tax, but even if you have other land worth about $1 million, that is still exempt from land tax. It's under the threshold. However, in a trust, from the first dollar of land value, you're paying land tax.
And that land tax is paid at 1.6% of the land value, which is crazy cow, because $1 million which is very reasonable in New South Wales to have a property that's worth at least $1 million in land.
Yeah,
You're paying $16,000 per year on land tax.
that's right.
$16,000
Something that could be avoided
completely.
if even a company has a threshold as well.
Correct.
Company and personal name have a threshold, so you wouldn't buy your main residence in a trust.
That's right.
Now, look, there's a lot of properties, a lot of different types of properties, a lot of reasons to buy properties, and there's always a structure that is most beneficial, or a vessel that is most beneficial for which property you buy. So main residence is almost always better to buy in your personal name.
Correct.
Now,
Give me another example. Give me a development site. Do you
Yeah.
want me to talk about
go
development?
go ahead. Tell me about a development.
Say hypothetically, I want to buy a site and build a duplex. Common occurrence in Western Sydney.
Yes.
They love it,
Yes, I do.
especially
You
people of
love it.
Lebanese descent. I do love it. There's reasons why I love it, but the intention with this duplex is to buy it, build it, sell it straight away. What do? I'm obviously going to put that in I say this obviously. I'm an accountant. I'm sorry. It's obvious to me. It's probably not obvious to everyone else.
That's right.
When you build a development, it is technically trading. It is not capital in nature.
If you're in the business of doing developments,
In the business of doing developments, that means that you are liable for GST, and you are liable for you're liable for the tax rates or whatever they may be. You do not get the 50% discount. It is not capital in nature.
it's not capital, which means you're paying tax on your marginal. Say if it's in your personal name, you're paying tax in your marginal tax rates for the profit on that build.
Correct.
Yeah.
So I'd say the best structure for a development, if I have partners, it gets a bit more technical. I might introduce unit trust, but most of the time, if I'm doing a development for myself, I'd have a company.
Yeah.
I'd have a company
That's
doing
one
the
one
development.
example, like a very specific example of why you'd run it in a company. Now, just to be clear, how you should buy a property or how you should run a development, it depends on a lot of factors and a lot of questions which your accountant needs to discuss with you first, and to discuss whether it's the best option. It's not always, I'll just buy it in a trust. The trust is the best option. No, that's not true. A lot of people and this is probably a lot of online people talking about buying things in trust structures, separate borrowing power, things like that. That may be the case, but you're not understanding what the tax implication is of doing that and how much tax you might be paying for running it in a certain structure.
That's right.
So definitely check with your accountant, and they're going to ask you probably about 10, 15 different questions before they advise on which structure is best.
I did miss one consideration. Borrowing is another consideration. We do work closely with brokers to make sure that we get the right structure tax-wise and the right structure borrowing-wise.
That's right.
Because banks get a bit iffy when it comes to trust and all that. So we need to make sure that they're happy with everything.
That's right.
Yeah. Another property purchase that's pretty common is a long-term hold. I'm there for the capital growth. I'm not there for the. I'm not looking for a short flip. I'm not looking to rent away and sell it. I'm
This
looking.
is something you're doing. It's an investment.
I want to hold it. I want to chuck a granny flat on the back. I want to get as much rental income as possible, and I want to get capital growth in it. What structure should I do it in? That depends what stage of life you're in.
Correct. If you're early on, say if you only have one property, the house you live in, there may be some potential in your personal name. Now, say if you've maxed that out, or the potential in your personal name, you have multiple properties in your personal name, then there is a potential for a trust structure. But again, that depends on the other queries, like positive or negatively geared, and which state it is, depending on the different taxes in different states, and as well as land tax considerations.
We haven't even gone into commercial property. This is strictly residential.
Yeah.
There are even further considerations when it comes to that.
Yeah. So if you're looking here for a straight answer on, I want to buy this, which structure should I buy? It's not a straight answer. It's not simple.
That's right.
There's a lot of questions about your situation and what structure is best for you after that.
We can go through examples as much as we can, but
Yeah, I can paint you a scenario and tell you what the best case for that scenario is, but it's pointless because everyone has a different scenario.
correct. That's right.
So
Especially,
Paddy, you're saying, all well and good to go on TikTok and look at your buyer's agents.
all well and good. And you know what? Like there are some look, the cream does rise to the top. The top guys are pretty good at what they do. I don't need to name names.
Why can't we just call him out? He's good. Jack Henderson's
Jack
good.
Henderson's great.
He's good.
Ravi Sharma's great.
Yes.
They're two of probably the best.
Yes.
Right.
But
The-
while those guys are great, there's a lot of guys that aren't.
Yeah.
So
So just be careful. Be careful of the content that's out there.
yeah.
And try and get it from a reliable source, and always get a second opinion. Get a second opinion about the stuff we talk about as well. I don't care. I'm putting it out there. Go look. Go ask another accountant exactly what we're talking
I'm
about.
100% right. There's no need.
Get a second opinion from Michael, then get your third opinion from Pat, your fourth from John, and your fifth from Tiffy.
Yeah, just call everyone up. Nah, but you're right, Pat. You're right. Beware what's online and speak to your accountant. Vehicle purchases, property purchases, most common ones, speak to your accountant.
Business purchases.
And of course, business purchases. Get your due diligence done.
Completed.
That's a tongue twister.
Yes, sir.
So pretty much don't live your life without your accountant.
Your accountant, John loves saying this, your accountant's your speed dial.
Call us up.
Call us up.
Please, anything, call us up. Don't call us up after the fact.
There's a reason why we're structured the way we structure our fees. And it's literally for that. Call us, email us, communicate with us. Keep your lines of communication open.
That's it.
As an accountant, that's the most important thing from my clients. And if I can keep the lines of communication open to them, I expect them to return the favor.
Done. So when are we doing our duplex, Fatty?